Hi everyone. Today is August the 24th. It is a Thursday, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are first looking at the futures. They were quite high at one point and now fading. So again, remember, what we look at is two candles to the left and the current candle. Who's in charge? Well, if we're above the high and the close, then buyers would be in charge. But the buyers came in and then quickly turned around. To me, this is just short covering right here in this piece where the buyers went up. And now we're fading underneath this motion. So what is the likely move today? Okay, well, my thought is, while my mouse decides it's going to be insane, my thought is that what the price action ought to do is give back a little bit of this, because a lot of yesterday's motion felt like short covering anyway. And so notice, let's first look at the ribbon. And when the ribbon is red and we have that big bounce at the top of the ribbon event, we look to the left for heavy congestion. And we notice wick after wick after wick after wick after wick. And if we put the top of the wick we had last night with here, we can see that we really are moving right against these candlestick bodies, right? 44.84 1/4. My suspicion is that the high for the day is already in. Now, could I be wrong? Of course. How will I know that I am wrong? Well, the first thing is I'm going to break the high of yesterday, which is 44.7625. If we break that, don't think about shorting, because what's going to happen is another leg of short covering is likely to come into play, probably somewhere around the 4,500 mark, maybe even 45.16. Okay? What I do believe happens is that we carve out a higher floor. Remember what a chart does, okay? When a chart is changing direction properly, it will first fail to head lower. Second, it'll breach resistance. So this was the first resistance edge. It failed. But all these higher lows tell us, I gotta buy the dip. I gotta buy the dip. I'm in a negative rotation, but as long as these higher lows show up, I gotta buy the dip. So now we're looking for another fade into support where we potentially buy the dip. So where is that? Two of them. One is up here, somewhere around 44.49, 44.48, you know, where it danced around forever before it broke out. And then the second one is this, maybe it's around these wicks. My guess is that it's really down here, 44.20, 44.19. So what could precipitate that? Well, a lot of things. First of all, we could have ourselves a pretty nice fade as the day moves in. And if we lose 44.49, remember, buyers will come in just through the dip and try to bounce. If we cannot get up over the pre-market low, wherever that happens to be in this morning, if we can't get up past that, the buyers are going to have trouble. So that's what we're looking at, right? We can see the fight. Let's go to SPY. We can see the fight in the same way. We've got this gap area where price action was really very noisy. Price action is sitting just under the close of the prior day. That's still an area where you might see buyers come in. Now, the job numbers came in. Initial jobless claims are down, and only 10,000. Remember, these numbers are not real. They're approximations. And then after that, we had a negligible upward revision from the prior unemployment. This is me having the hiccups. Hang on, let me get over them. Hold the phone. Okay, that took a little longer than expected. So, sorry about that. So here's what we're looking for, the fleshing out of support. Clearly, they're going to try and hold these wicks, so you're going to see buyers sort of try to get a handle there. If we can't breach the close of the prior day, that's the 445 region, we will slip down into the candlestick body of the day before. Looks like about the halfway point is not at the 43 area, but really at about the 42.20-ish zone. So that's really what I am suspecting, and that's what we will go for. Let's take a look at the NQ. The NQ doing the same sort of thing, right? Below the high and below the close. This is a Maribozu candlestick. Very unique. These are fairly rare, but they're incredibly bullish. Maribozu candlesticks are incredibly bullish. So if we look at the candlestick by itself, we would say, hey, you know what? We broke right out of the ribbon. We're all the way up past resistance. Surely the traders are going to try and hold this floor here. And it looks like they're trying to hold the floor, right? As long as we don't get below 15,273, the dips are going to bring buyers. And on top of that, there is fuel in the NQ from NVIDIA, right? And so NVIDIA was up at 520 in the pre-market yesterday. Now it's coming into the close of the day at around 500. Our 500, 510 long call spread is going at about 280 right now. It might not be a bad idea. Let's see what happens when they come in. It might not be a bad idea to cover that one, but we'll see, right? But obviously, this is the reason that this price action in the Qs and the NQ, it's really being buoyed by NVIDIA. All right, so let's take a look at the Qs. Above the close of the prior day, this is heavy congestion. So there's bullish action, but it's also dipped very low. The NQ candle is not the same as the Qs candle. The Qs candle is not a Maribozu candlestick. And so we're looking at something that looks a little bit different, but very bullish nevertheless. Low, higher low, higher low, higher low. It's a buy the dip environment. You look to the left, you see where resistance held as support and then became resistance, and that's where you're going to look for that first floor for price action to hold. We have Jackson Hole. Let's see what's happening today in terms of conversations. 10 o'clock, Fed officials begin their interviews. We're not going to do anything. Tomorrow, Powell is going to give his opening speech right after the Michigan consumer sentiment number is out. And that number has actually been on the rise. So we are looking at a very bullish formation overall. A lot of people believe that the cracks in the system are not showing up in the market just yet, but that they will. But that means that people are going to get in front of a short too fast, and they're going to have to buy to cover. Because they are getting in front of the short too fast, they are creating a bid under the market. That's why prices are not going down very quickly. As a matter of fact, they're going down very slowly, and in this big fade that we had from the month, the Qs are right back where we were in June, right? And so this is something that says, hey, we're moving sideways. We've got some sideways action. We'll see what happens. Good luck trading today, folks. I think it's going to be a little bit sticky, but pullbacks are still buy zones. Take care.